50 years ago, while still in high school, I took a college course in accounting. I knew at age 15 that my future was in business, so I felt that a primer on debits and credits, assets and liabilities, P&Ls and balance sheets would prove of value. It was, and to this day, that was the most valuable course I've ever taken. I was reminded of the experience the other day when I went to the ATM to grab some cash. Left in the machine by the prior user was a receipt. Of course, I had to look. This one showed a balance of $43.19 and a withdrawal of $20. Now, I live in a college town, and knowing the student population as we do, it's no surprise that someone has $43.19 in their checking account. I guess regardless of the era, many students always seem to be starving. However, what was disconcerting to me was that this individual's $20 withdrawal clearly indicated a lack of financial literacy on their part, and likely that of their parents. Why? Because they paid the bank $2.50, that's 12.5% of the transaction value, to withdraw their own money. In a word, that's ludicrous. Now, I admit that I'm anal when it comes to bookkeeping. I've been a Quicken user since the program first launched way back in 1984. Not only are my business income and expenses fully documented through QuickBooks, but way back when I got in the habit of tracking every personal expense and income item, I maintain a personal balance sheet and handle my personal finances as one would a business. Each receipt that I receive is entered into Quicken, as are my income items. I reconcile each of my accounts on a monthly basis. Not only that, but all of my monthly bills are automatically inserted in my register 30 days in advance. I not only know my current balance, but my cash availability a month from now. Simply put, I'm in total control of my finances. Contrast this to what seems to be the majority of people today. You know them, as they pull out a credit card or debit card for every purchase, likely without caring to understand where their funds come from or where they go. They never take a receipt, and I'm doubtful that they ever reconcile their bank statements or even know how. I call this management by checkbook balance. If they have $20 in their account, that's all that matters. Why this commentary? I can go deep and wide on this one, even hypothesizing that our society's tolerance of our federal and state deficits are the direct result of the checkbook balance management system. Who cares if you have bills to pay or that you know that you're going to need to replace your car's brakes next month? If there's money in the account, that's all that matters. Unfortunately, it's our observation that this is also true of many professional practices, the result of reliance on cash-basis accounting. As I've shared in the past, cash accounting masks both payables and receivables and the true performance of your business. It's management by checkbook balance. And in our inventory-rich, insurance receivables-rich industry, cash accounting is a prescription for financial challenges. Accrual accounting, in the inverse, provides you with the information you need to understand your true financial picture. What are your assets worth? How much do you owe vendors? Who owes you money? How much? What are your insurance and vision plan write-offs? Only accrual accounting provides you with the full and clear picture of where you stand at any given moment. Not so your cash basis income statement, or worse, your tax return. So back to that individual that paid 12.5% of the value of their asset to withdraw their own money from the bank. This small action is indicative of a lack of financial literacy, which is systemic throughout our population and likely in your own business. Cleinman Performance Partners continues to ring the bell of concern over the impact of vision plans on your practice. Most optometrists don't clearly understand where their money is coming from and where it's going. You can see your checkbook balance, but not what's in front of you in the form of payables or how much you're discounting. It's time to gain deeper insight into your financial performance with the rather simple actions necessary to operate using accrual basis accounting. As for your continued use of cash accounting, it's the economic equivalent of bowling blind. Think about that.